Has there ever been any linking to the Democratic Party connections? Because it jumps out at you. You got a couple of things. You got the mom, who is a Democratic Party operative and an attorney and a professor. Then you got the dad, very similar type situation. Then you have some links and dates where like Biden, and this might just be, a conspiracy theory, but Biden is nominated and then 13 days later, FTX starts. It just seems like it's a
there's
way to wash Democratic money.
There's a lot going on here. So let's take just like the most recent example. During this midterm election that just happened, and full disclosure, my personal politics, I think I lean left, so this is right. It's not a conspiracy. This is just like, court filings that show this, that during the midterm election that just happened, Bankman-Fried, nearly $40 million. I think it was around $36 million that he contributed to the Democratic Party during the most recent midterm election. And hello, you got?
Yeah, we're here.
Yep. Yeah, we're good. We're good.
I just got a call. So during the last election, he donated around $40 million to the Democratic midterm election campaign. And a lot of people, and one of the people who were received one of the most largest contributions was Maxine Waters.
Oh yeah.
Maxine Waters is head of financial banking committee, or I'm not sure exactly specifically what the committee's called. But a lot of people are saying that, like, listen, you spent all of this money on this campaign, and they just narrowly retained the Senate during this midterm, and then all of this stuff broke. You really think the Democrats are going to turn around and be like, okay, now let's go after Sam Bankman-Fried, the guy who lined our pockets and let us just win this last election? These are speculations, but it's just like it creates this huge conflict of interest, I think, where you're sort of just like, yeah, you sure you're going to be able to regulate this guy?
I think one of the biggest issues is he was like the tech darling. He was like that. He would be like
Warren Buffett of crypto.
He would be like the Da Vinci of cyber currency, and no one wanted to be on the wrong side of him. That's why he gave the Republicans and Democrats. My biggest problem is that no one ever even made the check to see if the money was actually real. No one even looked at that. Like, they didn't even look that far. Because if you look at the being worth $23 billion on one day and 3 days later being worth zero, it's literally impossible for that to happen unless the entire structure of it is bullshit. Meaning you have zero assets. If you had a company that was worth $23 billion, you probably have a sizable amount of billions of dollars that are assets like land, properties, patents, technology, all these other things that are worth money.
These guys didn't have any of that.
This guy had nothing, zero. Yeah. The houses he bought for his family and his friends, that's pretty much the only real asset that they're going to be able to collect. But I mean, I love to hear what you guys think.
And it keeps going back to this FTT, this made up token thing. So FTX's big claim to fame in 2021, FTX was growing when all crypto was sort of like on the decline. A lot of people were saying, oh, it's crypto winter, all these kinds of things. FTX was making more money because FTX's business sort of plan at that point was to buy up dying cryptos.
Yeah.
So specifically, there was one called Luna. Luna, it's a complicated whole fraud in and of itself. But this coin Luna was crashing in early 2022. It was a very popular coin. A lot of people supported it. People thought, like, there's no way Luna could crash. But in 2022, it started crashing. FTX came in and was like, listen, Luna, I'll give you $500 million or whatever, $1 billion. Let me buy up all your coin, and then I'll take over. Luna's like, yeah, sure, do it. Turns out that FTX could only do this with Alameda's money. So what Bankman-Fried did was transfer money from Alameda back to FTX so FTX could then buy Luna. The problem with all of this money going between the two of them is that all of the money was in FTT tokens.
Right. Was it real money?
Wasn't real money. So when, as Rob was saying that, like, all like these Wall Street guys are looking at the books, how can they not? Well, Alameda Research books is like, oh, we're in the green 14 billion.
Yeah.
We have assets of 14 billion. Turns out like 13 billion of that was just in this funny money FTT token. And they were using that.
But no one even asked the question. There's not even that level of verification.
Exactly.
And the other issue is this: is when you let another company, another Bitcoin person, in the back door for $2 billion, $2 billion. So like, let's call it like 8 to 10% of your company. He can and did trigger the landslide that happened to his company, because he made that public. That not only don't believe in this anymore, I'm pulling my money out. And by the way, now he wanted to be bought out by that guy, and that guy said, on second thought, we're not gonna do that. And then it literally just straight down after that.
Well, here's the interesting thing: Sam Bankman-Fried went out and tried to borrow against this FTT token to try and save the day, and anywhere he went, it was like, we're not going to lend you any money on this.
This is degenerate gambling. He's just going around to everyone.
There's no value here. So like he's trying to go out and trying to margin a token that is monopoly money. And no one will
just like this. This is my wife's for her 50th birthday party.
Yes.
This is what we gave out to people. It was all over the table, right?
The problem is
this is real. This is more real than what he was doing.
He would then leverage that for 100 times and be like, "This is actually worth 5,000. This is worth 50,000.
Give me some money. I have some real money. Look, I have it right here in my hand."
Now I know you could trade on margin, but when you trade on margin, you trade on a real asset. So you could have a $10,000 in your TD Bank account or whatever like that, and they'll let you buy $20,000 in stock with it. Some exchanges will let you margin 5 to 1, but you have a value of something. You have the cash that you put in the account, and then you have the stock that you bought. So if you do get a margin call to bring up your margin, you have to put money in. If you don't put money in, they liquidate your account. And then you're back down to wherever your losses are. But so he never had to deal with margin calls. He never had to deal with anything because it was all make-believe stuff. So you know what I mean?
All this being in crypto, there is no SEC oversight. There is no, like requirements for liquidity minimums and things like that. And the fact of the matter
president's on his back in his back pocket. The SEC president is in his back pocket.
That's a whole nother conversation. I want to get to that.
And it's connected to Ellison, who is the girlfriend. Her dad was actually a professor at MIT, and it's all connected. But the thing is that like free markets are going to free market, So if you have an unregulated cryptocurrency, all this FTT, the only reason it had value was because people agreed that it had value. It was being traded on his exchange, and he was like Bankman-Fried. Everyone trusts him, so FTT has value. This guy, CZ, he's the and I told you we'd get to China eventually. But FTX was the second largest crypto exchange in the world. First in the world was Binance. And Binance is run by this guy CZ. When FTX first started, Bankman-Fried and CZ were actually friends. The Binance was the first largest investor in FTX and actually bought 20% of FTX. Yep, there he is. And what that investment did was it was all in FTT, but it made Binance invested in FTX using the funny money of that FTX came up with. After there was a CoinDesk article that came out that said Alameda Research's entire balance sheet was the FTT. As we talked about, they're parading around like they have this equity, but it's all funny money. So CZ saw this and was like, okay, the house of cards is about to fall. I hold $2 billion in FTT that came from the initial investment. And he's like, you know what? We're done with this. He dumped his entire portfolio of FTT on the market at once. That's this text.
There it is right there.
November 6th.
That's a tweet right there. That's the actual one that he said.
As part of Binance's exit from FTX equity last year, and I want to talk about this for a second. Binance received roughly $2.1 billion US dollar equivalent in cash. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT in our books. All right. So when this happens in the market, there are guys that are in the stock market There are guys that are market makers. So I was a NASDAQ market maker, and you may be trading a stock, and they'll say a stock has support or resistance. And what that means is that there are traders who are supporting the stock and buying the stock at a certain price. And resistance means there are traders who are selling the stock at a certain price. That's how the NASDAQ regulated market works. So you may be trading a stock. I used to trade this stock, Terra, and we would say, all right, maybe there'd be 4 or 5 guys willing to buy stock on the bid all day. You sit there and you're buying fucking stock. If someone comes in and pounds the market, they're like, fuck Terra. We're going to sell 100,000 shares of Terra. And maybe your appetite is 5,000 shares. You're going to buy your 5,000 shares. You're going to move out of the way and you're going to create another support level. That doesn't exist with FTX. Right. So if someone dumps like $2 billion of a stock on the market, or in this case, this token on the market, there's no market.
Yeah, but there wasn't even cash for that. I don't even know where the cash came from that.
But there's nobody willing to buy it.
According to the numbers, there's not even $1 billion in cash. Is that correct?
Yeah.
Wait, say that again.
Is it true that they only had like up to about $1 billion or $2 billion in cash, real funds? Like they really were worth about
$1 billion
access or receipts to track, because people paid real money into the company.
Sure.
That's how they know how much money went into the company. They know that at the end of the day, they played games with it and they bought houses and it's worth zero now. But the cash is only a small percentage of what they said they were, because
about 10%,
it by doing the cost of the made up token was their equity.
So that's where the real fraud comes in, right? So yeah, this guy Bankman-Fried is running around saying that I'm worth $5 billion or whatever. And during the bankruptcy filings, it was shown that like his $5 billion self-worth estimate was based on a portfolio filled with all these different cryptocurrencies. Turns out his real value was like shy of $1 million. Like it was nothing to what he was saying. But where the real fraud comes in is that he was using this quote unquote equity in the funny money to turn it into real money, and then go around buying like $300 million worth of property in the Bahamas.
Right.
And Rob was pulling up that Cold Fusion video, and it shows in that video that like there was this like marketing ploy that Bankman-Fried did, where he's like, he's just this guy who just drives a Prius. You know, he's just like,
he did the whole. He did the whole. I drive a crappy Toyota car.
I never want a guy, if I'm going to give him money, to drive a fucking Prius. I want a guy that's flying home in a helicopter playing Flight of the Valkyries over Long Island. That's the guy I want to give money to. And I think what happens here is that there is no market, and there's no market for FTX or FTT. FTX was, if he stuck to what he knew, what he was doing.
No one would invest money in this company, by the way.
No,
sorry, but no one's investing money like that.
No one should.
No one should have. But people did, right? And what he is a great salesman, but people don't. All right, and I'll relate this back to the construction industry for a second. When a guy first comes, I'm in the construction industry. When a guy first comes to you for a job, he doesn't know anything. He could graduate from tech school. He could have a master's degree from Rutgers. He doesn't know shit, because he has no real life experience. He has to build on that knowledge. These guys had no true real life experience. No one said to them, no. No one said, you don't know what he could have all these monitors and do all this bullshit and do whatever, but he may know what he's doing, but he doesn't know what he is doing. And the problem is no one wanted to say no to this man. And his girlfriend also, because it was cool to invest in there. Tom Brady,
but he was like the darling daddy of crypto. He was like the poster child for what the future is going to be with crypto. That was the whole thing.
Bullshit,
they put him on a cover of Fortune and Inc. And he's on every commercial. He's got the most popular couple in the world, Tom Brady and Gisele Bunsen, have their whole investment in FTX, which means they were paid in nothing.
Yeah,
they were paid in zero.
The psychological side of the scam is amazing to me, because he was really able to fool Wall Street. And this is sort of my synthesis of what happened. But like, he was able to fool Wall Street because he's like dealing in this crypto currency exchange, you know, which is so foreign to like the traditional Wall Street guys, that the Wall Street guys are like, oh, so you know what you're doing, right? And the banker's like, yeah, of course I know what I'm doing.
All right.
Like, okay, fine. Here's your money. You take all my money. I'm not going to ask any questions. You do what you need to do.
And he used his parents' good name, and his parents were in that group, and he used his parents' good name, and they said, oh, this is Sam. Oh, this is so-and-so's son. He probably does know what he's doing. You know what I mean? What he's caused is chaos in the legitimate Bitcoin market. Or the legitimate crypto market, which Rob is showing here. Because people don't know the difference between the two things. And I think that's what really, really makes this
you gotta listen to her, Ray.
All right, this is it.
Real quick. You gotta listen to her.
Rob,
if you want to never have sex again, you should listen to this.
No. I'm glad you found this, because she says something that is so dangerous for a trader.
The elementary mathematics thing. Yeah, that's
put that on there, because I want to talk about
customer funds from here to over here.
And to make things worse, some of the things that Caroline said in interviews were
she's kind of hot, though. I know you don't want to hear that, but there's some hotness.
Yeah, absolutely.
Ray, we need to have a conversation.
Use very little conversation offline. Use a lot of like elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. I'm trying to think of a good example of a trade where I've lost a ton of money.
Yeah, how about your whole company?
Well, I don't know. I probably don't want to go into specifics too much.
All right, so real quick, in that conversation, the thing that she says, if you're an equity trader, or in any, whether it's equity or you trade in grain or you trade in whatever, we always use stop loss orders. You have to. It's how you protect yourself.
If you have a real asset,
if you have a
company worth losing its money for, this guy had a platform of just built up equity that no one ever asked. Can I see an example of this equity, please? Can I actually see a bank holding that has this money somewhere? And the issue is, it doesn't have it.
If your head trader goes on, I don't know what the fuck show that was, sitting on somebody's couch. She looks like Velma from Scooby-Doo, and I don't, but I would never allow that if I was in charge of that company, first of all. Second of all, it's terrifying when someone doesn't she goes, well, I don't think that's really a good method to stop loss. It's called a stop loss order. That stops loss. That's where you're at. That helps you to prevent markets from crashing, from your holdings from crashing. And you trade with stop loss orders. All traders do. All traders have points of resistance and points of where they say, this is where I'm going to support. This is my stop loss. I'm done at this number. This is the number that I'm done at. How do you not have that?
What's so interesting about this whole thing, and again, the psychology of this is very interesting, is the fact that they had such an appetite for risk because they knew they were playing with funny money. Caroline Ellison didn't care if she lost all that money because she's like, well, everything's up in the air. It's all crypto. We're kind of giving it
very fluid. Everything's very fluid, very dynamic.
There's literally no moral hazard here. On Wall Street, the reason why you can't trade customer funds, you can't invest customer funds without them knowing, is because you can't gamble someone else's money. There's got to be a risk to gambling the money. And when you're completely detached from that, she can make trades and be like, I don't know what's the biggest loss I've had.
But the stock trader, the point is, the stock trader works for a company, Merrill Lynch or whatever the company might be, that has billions of dollars of global assets that could be seized in the event that they made up a plan to steal your money.
Huge
to eventually, in theory, be able to someday get some or all of your money back. That's the whole idea of, I give you my money, and there's always a threat. If you do the wrong thing, I'm going to come to you and take it legally from you when you do the wrong thing by me. Right? I mean, that's really, but this guy had none of that. He had none of that. He didn't have to worry about any of that because there was no liability, because there really is nothing.
And also FDIC insurance, SEC coverage, none of that applies to cryptocurrency asset exchanges. Part of this story is like Bankman-Fried was lobbying to get certain sorts of regulations, and everyone's like, oh, look at this CEO. He's trying to regulate his own industry. Turns out all he was trying to do was create a favorite status for himself and his company to the exclusion of CZ and Binance. foreign exchanges, Chinese exchanges. And that's kind of the reason why CZ went against FTX in that string of tweets that you were showing later on. So CZ says that he's dumping all FTT assets onto the market, which effectively is going to create a bank run. Caroline Ellison gets onto Twitter and is like, listen, if you're dumping them, at that time, FTT was trading, I don't know, $27, $28. She's like, listen, if you're dumping them, I'm going to come buy them from you for $22. $22 on the token.
Right.
CZ's like, no, I'm not going to do that. And the reason he didn't do it, he put it in his tweet. He's like, because you guys are against industry partners. You guys are not. You were you're advocating for regulations that would hurt other industry partners. So it was just like a personal spite between them. And then CZ's like, you know what? I'm done with this. And that one tweet led to the entire collapse of the house of cards.
Now, what liability does Binance have in this? Not so much legal liability, but what liability? Because really, he created this run. If he didn't do what he did, with this podcast would be about something totally different.
He bought the coin. He bought the coin with his real money, real money, like his real money from his other company, his real money, allegedly.
Right.
But Rob, let me ask you this. Why? Why did he say all of a sudden?
Because how do you want to get rid of your competition? He was one step away from.
Thank you.
One step away. He was $36 million advance payment away from being the most popular within the next 2 years, the most popular crypto guru on the planet that could have said, CZ, bye-bye. You're gone now. We're going to get rid of you. We don't like what you're doing over here. That's why they pulled the plug on him.
What does Binance do? Binance
pulls the rug out.
Yeah.
Exactly.
They wagered, that was a $2.2 billion wager that was going to happen, right?
Yeah. And how smart was he, though? How smart was
he? Obviously knew the house money. He knew the rules on the house money for sure.
So Ray, the smart thing. So there's a great Vox article that Bankman-Fried did an interview. So the collapse happened November 11th, 12th, something like that. That weekend, Bankman-Fried off in the Bahamas, doing whatever the hell it is he does, did an interview through Twitter DMs with a Vox reporter. And in that interview, he was so frank and so open with it. It blows your mind. The interviewer asked him well, you were considered the Warren Buffett of crypto. You were all about altruistic entrepreneurship and helping everyone out. He answers with one word, H-E-H. He's like, yeah, exactly. Yeah, just PR, F the regulators. So he really makes clear that all of this was a charade. All of this was just whoever wins, that person is right. And he says in this interview that I'm not the only one. All of the corporations are doing this. That as long as you are the one who is holding the bag at the end when the music stops, then you're right. And whatever you did is justified. And I think this is such a toxic mentality. It lets them in their head, and it extends to the Elon Musks of the world and all the other people with. In their head, they think all the ridiculous things they're doing, all the risks that they're taking are justified because they know they're on the side of the angels. As long as they win and their worldview succeeds, then everything is okay.
But can you imagine CZ had that much money that he was able to put $2.2 billion into token of another company just in the event that he has the opportunity to cut out the legs of somebody? And of course, we know starting at, it was $2,000 or $3,000 at one point, and it was up to 60,000, right? What was the height of crypto?
Oh, you're talking about Bitcoin?
The highest price.
It's about Bitcoin, right?
64.
Bitcoin.
Okay. Bitcoin. So it was been as low as 2 or 4, and as high as 64, and now it's near the mid third of that area.
Yeah,
but
I think it's 16,
just amazing that company was able to buy $2.2 billion of that other company's product, which they probably knew, by the way, was fake. Yeah, probably could have made a claim against them if they really needed to.
But think of the balls of the guy of CZ from Binance. Think of that the foresight that man had to say, I'm going to lock Sam Bankman-Fried up by, like you said earlier in the podcast, you said you don't let your competitor in the back door buying a fucking position in the company. And so now he owns, but Bankman-Fried needs the money. So he takes the $2 billion from Binance. Now Binance owns a position. What Bankman-Fried should have said was, dude, I'm never going to be number one. You can always be number one. Sometimes it's better to not be number one. Sometimes it's okay to be number two and go about your fucking business. Sometimes it is. But this guy, you see this shit? And I can tell you from personal experience that this is how you get in trouble.
That's the toxicity, though, of this mentality. Like you're saying that just accept the fact that you'll be second. Someone like that, someone who's so narcissistic and is so certain of their own wisdom, is never going to be okay with being second place. So even after this collapse happened, and in that Vox interview that Rob was showing,
hit pause there for a second, too. I'm sorry. Hit pause on that because there's a big thing with the.
We'll go back.
I want to go back to it. But I want to talk about who's
the
who
SEC
with
chair.
the mother. With the hideous girlfriend. Go ahead. I'm sorry.
That penny is yet to drop. By the way, the SEC chairman and stuff. We'll see how that goes. But yeah, so it's just it blows my mind the way that like he was so certain of the way he was going about his business that to accept to be second place for him is impossible. It would never happen. So in the Vox interview, he's just like, if they just gave me one more week, I would have gotten all the money back. I feel like I'm listening to like a gambler who just needs to push it.
It is a gambler. That's right. It's exactly what a gambler is. It's exactly what it does. It rationalizes the irrational.
And let's talk about who his co-CEO is, Sam Trabucco, who's a professional gambler, a professional blackjack player, banned from multiple casinos. I mean, that's the mentality.
This high-risk guys hang with high-risk guys.
Absolutely.
Exactly.
Gamblers are also probably the best stock traders as well, because there's a science behind it.
There's guys who know how to play cards. There's guys who know how to count cards. We've all watched the MIT movie. I know guys like that from a past life that they're professional card counters, they're professional gamblers. But those guys, it's always like tomorrow. They might win $30,000-$40,000 today. And then they're always like, man, I'm going to get it tomorrow. You know what I mean? And those guys, they always have that feeling and they always feel that way. But this guy did it on a large scale, and he did it very publicly, and he did it very publicly.